This short video is going to go over a concept I call retests. Support resistance are areas where there's likely to be some buying and selling. Support areas are where there's buying, resistance areas where there's selling. A retest is simply when a support or resistance level gets broken, usually price returns to it and sees whether it can get back through it. If it can't, then it's very likely to continue in a new trend direction, and I call this a retest. For example, let's say this is your support area and the market's working its way down to it. Oftentimes support areas get broken. I like them to be broken by 10 or 15 or more pips, and when that happens, oftentimes they come back to it, and when they can't get back above it, this support area now becomes resistance, and you can look to sell there because the trend's likely to go the other way. You can put your stop right above here, and as soon as it starts moving down, you tighten it in half, and after it moves 10 or 15 pips, you move your stop to break even, and quickly these become relatively low risk trades once you're in them. The same exact thing happens to resistance area. There's likely to be selling there, price comes up to it, and sometimes price stalls there and either goes sideways for a while and then breaks out, or it pulls back and then it shoots up and breaks it. Again, I like it to break a resistance area by at least 10 or 15 pips and up to 25 pips. When it does, and when it returns back to this area, it's likely to become support. There's likely to be buying there, especially if you had selling at it at a previous point. Traders who sold earlier were up a little bit of money, or if it went sideways and broke out on them, they lost money immediately. But regardless, once it goes over this area here where they sold, they're losing money. So when the price goes against them, you tend to have stops up here, which buy stops cause the price to go up. But when the price comes back down and lets these people get out near break even, they tend to have their orders resting there, and that's why this concept works. Let's look at some examples. Today in the CAD yen, the price broke out. It went above this weekly midpoint level right here, and you can see price came back down and retested it. And this is a good sign. When price doesn't break down, you can go long when it breaks out over those bars highs, and you can put your stop right underneath here. And the price starts off a little bit slow and going up, but because of the previous momentum, hang on, it's very plus 20 strength previous moves are very likely to continue, and you can see this eventually exploded up. This oftentimes happens around the hourly moving average. The price breaks it, comes back up, and when it can't get above it, this is a great place to go short, knowing that traders are no longer buying at the hourly. There's actually sell orders there. When it goes down, you can put your stop right above the high. This one's not a perfect example because I like it to go at least, like I said, 10, 15, 20 pips through the hourly, then come back and test it. Here you can see the price is chopping around right near the hourly moving average and the monthly pivot level here. Once price breaks it, notice by about 20 pips, comes back up and tests it, and therefore it becomes resistance. This is what I call a retest. You go short, and in this instance, as price goes back down, you can see there's absolutely no weakness compared to the previous move, and it doesn't continue. Retests don't always generate huge moves, but they do generate frequent trades that you can use for scalping basis. If you can take a few 5, 10, 15 pip trades out of the market each day, it adds up. Here you can see the price broke above the hourly and the previous day's high, came back down, and this is another retest right here. Wasn't able to go underneath it. You had the more momentum on the way up than on the way down, and you go long when it breaks out of the sideways range right here around 72, and it went all the way up to 95. It's a 23 pip move. Here's an example of a retest that didn't work. The market shot above the previous day's high, not by a significant enough of a margin, and that's why I like to have 10, 15, 20, 25 pip above or below a support resistance area, because if it just barely goes above it, it's less likely to have a retest. You can see in this case it shot above it. The market's momentum was very strong. The IntelliTrend bars are green. Didn't really go enough above it to give it a high probability of having support here, and on the way back down it immediately penetrated it. If it had hit this level and went sideways maybe a bar or two, then started to go back up, you'd go long, but in this case the retest failed. You can see in this instance a retest. It doesn't qualify based on the number of pips, but the hourly moving average, which is a resistance area with some selling here, and when it breaks through it the next time, traders that sold here were losing money. So when it comes back down to that area, they tend to buy, and when it breaks out of here, you go long. Didn't shoot up too much, only about 20 pips, but it is a good example of what a retest looks like. Once price broke underneath hourly, you can see it retested here and here before later on falling. This is just a quick video to showcase and highlight the concept of support resistance retest. Once broken, buy 10 or 15, 20 pips, wait for it to come down and test. If it can't penetrate that support resistance area back in the other direction, then you look for a continuation trade.